Okay, a very warm welcome, guys. It's awesome to see some regulars here today. So for those of you who don't know, my name's Aaron Hill and I'm one of the market analysts here at FP Markets. So look, from me and the FP Markets team, thank you all for taking the time out of your day to be with us. Now, this is a presentation on the wonderful world of Fibonacci. I see a lot of confusion among newer traders regarding the correct application of fib levels. So hopefully today I can help clear some of this confusion. Given my last hiccup with the slides, I just want to make sure we all clearly see the welcome slide and the audio is coming across loud and clear. If you can just ping a yes in the in the chat box, that would be fantastic, guys. As usual, yeah, brilliant. Okay, thanks. So as usual, any technical issues during the presentation, please let me know, and the support team will try and get things sorted. So look, as for a recording of the webinar, this will be available through the FP Markets website and on FPM's YouTube channel. Support also send out an email following the webinar on instructions on how to view the recording. So look, please feel free to check out FPM's Trading Hub. It's full of free educational content and daily analysis using fundamental and technical analysis. Also, be sure to check out Gary Burton's technical analysis at the FPM's Hub. The guy's incredibly experienced and is must-read analysis. So, okay, before we dive in, let's just run through the disclaimer on screen, and then we can touch on the agenda for the webinar, so we all know what to expect. So look, our disclaimer informs viewers that information presented in this presentation is intended for general advice only, and none of it should be relied upon as personal advice. FP Markets do not take into account your investment objectives, financial situation, or particular needs. So look, guys, this is ultimately to say what we talk about in this webinar should not be considered as investment advice, and should always, as I say in every webinar, you should always do your own due diligence with everything in trading. So look, in terms of topics, we'll look at introducing the concept of Fibonacci. There's a truckload of information about this available on the net, so I won't dive too much into this. What most of us here are here for anyway is the application of Fibonacci to charts, right? So that's the main focus. Following a brief introduction, I'll kick things over to Fibonacci Retracements, Extensions, and Projections. I'll try and clearly demonstrate how they're applied to the charts. We'll then round things off with a Q&A. If I'm unable to answer any questions or you're unclear on anything today, please go ahead and email me and the research team at market analyst at fpmarkets.com, and we'll get back to you as soon as possible. Also, if you have a topic you wish us to cover in future presentations, send across your ideas and we'll look at creating something for you. Just to be clear, this presentation assumes you have some understanding of chart structure and a basic knowledge of technical analysis. If not, feel free to watch previous webinars where me and the team cover this. So look, on a final note, can I ask how many of us, irrespective of your experience level or trading style, has used or are using fib levels in your trading, and how do you find them? If you could just ping across any answers you have in the chat box, that would be great. Do bear in mind though that fib studies can be applied to all time frames and therefore are suitable for day traders right up to position traders, longer term action. Okay, thanks guys. Okay. So before Thank you, guys. Thanks for the answers. It's brilliant. So look, before looking at Fibonacci trading applications, I feel it's important to understand how Fibonacci values are derived. This all started with this chap, Leonardo, and yeah, I won't even try to pronounce his surname, so if it's okay, we'll just stick with Leonardo. So look, guys, Leonardo was an Italian mathematician who first introduced the Fibonacci sequence. Give me a second, guys. Okay, the Fibonacci sequence to the West in, I believe, the 13th century. The Fibonacci sequence represents a string of numbers that, boast unique mathematical properties whereby ratios are formed. These ratios are found in things like nature and biology, and also extends to the financial markets, which is what traders are interested in, as they often offer traders definable support and resistance levels to work with. Now, the Fibonacci sequence is an arrangement of numbers where after 0 and 1, every number is the sum of the two previous numbers. While at first glance this may appear difficult, it's actually relatively straightforward. So look, 1 plus 1 equals 2, 1 plus 2 equals 3, 2 plus 3 equals 5, and so on. 3 plus 5 equals 8. And, look, 89 plus 144 equals 233. This essentially continues to infinity. Now, in my humble opinion, a trader should understand this structure if you're serious about trading with fib levels. There's also some interesting relationships between these numbers that form the basis of Fibonacci trading. While I'm unable to go over each relationship in detail, I'm going to make sure you have the basics. So look, kicking off with the calculation of retracement levels. So look, by dividing a number, I already clicked this through, by the way. By dividing a number in the Fibonacci sequence by the next highest number, it will equate to approximately 0.618. Look, if we divide 5 by 8, we get 0.625. So what about dividing 55 by 89? We then get 0.617. And also, if we divide 377 by 610, here we get 0.618. You see, the larger the value in the sequence, the closer the value is to 0.618. And as most fib traders will know, 61.8% forms the basis for the 61.8% Fibonacci retracement level. So what about the 38.2% fib retracement, another popular level? How is this formed? So, well, we simply divide a number within the sequence by the next two higher values to provide an approximate value of 0.382. So look, 34 divided by 89 gives us 0.382. And, look, so 233 divided by 610 would give us 0.3819, which is very, very close, right? And for the 23.6% fib level, this is found by dividing a number in the sequence by 3 higher values. For the 78.6% ratio, this is the square root of 61.8%. And subsequently, for the 88.6% ratio, this is the square root of 78.6. So look, guys, give me a second, 1 second. I think it's important to point out that while not officially a Fibonacci ratio, 50% is also commonly used as a retracement. So do be aware of that. So 1.618 is known as the golden ratio, golden mean or phi. The inverse of the inverse of this is 0.618, and both numbers are found, as I said, throughout nature and biology. Therefore, they are deemed important levels for traders. Look, as for Fibonacci extensions, if you divide a number by the previous number in the Fib sequence, it will give you approximately 1.618. The 1.618% is a critical level in Fibonacci extensions, as I'll show you on the charts very soon. So look, by dividing 89 by 55 in the Fibonacci sequence, we'll get 1.618. And by dividing, look, 8 by 5, this will give you 1.615. Look, and by dividing 987 by 610, it gives us 1.618. I'm sure you get the idea now. Another popular Fib extension, of course, is the 1.272 ratio. This is simply the square root of 1.618. Look, guys, apologies if this has confused newer traders. Please feel free to watch the recording a couple of times, as it's always good to know how the ratios are derived. Now, look, so look, on to Fibonacci retracements, and this is where things really get interesting. But for those newer traders here, I'll just quickly run over what a trend is, so we're all on the same page, and then I will dive into Fib retracements. So look, guys, a trend is what many traders and investors pursue to make profits in the markets. So without trends, unless you're an incredibly skilled range trader, it is difficult to make money. I'm sure most of us have heard the old adage, the trend is your friend, and it really is true if you manage to time the trend correctly, and you have the patience and risk management to ride out the pullbacks and retracements. Oh, excuse me, guys, I didn't really mean to press that. Sorry, guys. So look, an upward trend, as you can see on the slide, occurs when price action clocks higher lows and alongside higher highs. It's a relatively simple configuration that shows buyers are simply in the driving seat. So the same can be said for a downward trend or downtrend formed by lower lows, seen here, and lower highs. So I hope you get the gist of what I'm trying to demonstrate here, which is essentially to look for clear swings within a trend, especially if you're a newer trader. Now, Fibonacci retracement levels are horizontal lines that indicate where support and resistance are likely to occur. They are based on, obviously, Fibonacci numbers. The indicator is useful because it can be drawn between any two significant price points, such as a high and a low. The indicator will then create the levels between those points. So the chart shown is the euro-dollar daily time frame, showing Fibonacci retracements in a market trending higher. So Fib retracements are drawn from the low to the swing high, marked A to B. As you can see on the chart, guys, we begin with point A. We apply the Fibonacci tool from point A to point B, and this will provide you an array of Fibonacci retracement values here. It only happens that price discovered support of the 38.2% Fib retracement at 27.37. As you can see, price rallied higher and broke the previous higher high. So with that, we can then, once we see a decisive retracement form, we can then do the same again, right? We can extend the Fib retracement tool from point A to point B. And this again will provide you an array of Fibonacci ratios. Here we hit the a very deep Fibonacci retracement, the 88.6% level, which hit here and again here. So yeah, guys, look, any questions on this chart? Just let me just quickly check. No, okay, that's good. All right, excellent. So this, yeah, I've basically covered what I wanted to cover on this chart, I believe. Yeah, okay. Now, onto Fib retracements formed within a downtrend. We've stuck to the euro-dollar daily chart again. As you can see, we have a 78.6% retracement formed at 45.06, formed by extending the Fib tool from the lower high at point A to the lower low at point B. The Fib proved effective resistance on a number of occasions, as you can see marked within this purple range here. And again, we had another Fib form once price established a lower low down at this point here and begun pulling back. Price retraced as far north as, I believe it was 42, 47 maybe, I think it is, 42, excuse me, 42, 47. Just missing the 78.6% Fib retracement at 42.67-ish. Look, don't worry, guys. I will go over all of this on the live charts in a few moments, so it's clear. This is just simply to get the idea across. But the main theme of Fibonacci retracements is to form possible support and resistance in trending environments. They also prove useful in helping to decide stop loss placement. Okay, just clicking through. So now we're on to Fibonacci extensions. I see a lot of traders get confused with extensions and projections. Look, so what are extensions used for? So the Fibonacci extension tool is used to project price in the direction of the trend. They're also useful for locating potential support and resistance levels. Now, a Fib extension level is applied using 3 points, A, B, and C. This is crucial to remember, guys, as it is different to projections, which we'll touch on next. Just give me a second. So again, using the euro-dollar daily time frame, here we have 3 points, A, B, and C. Note that point C is a retracement, which can be measured using the Fib tool, as we did a few minutes ago. And here it comes to a 50% retracement. So look, with the extension, we're essentially extending the distance from, this is important to understand. So what we're doing is we're extending the distance from point A to point B from the retracement at point C. So let that sink in for a minute. So look, because it really did take me a few goes to grasp it. So with the extension, we extend the distance from point A to B from the retracement at point C. So look, in this example, price reached the 100% Fibonacci extension and turned lower. Now, for any harmonic traders here, you will note this is actually an AB equals CD configuration. This is a simple harmonic pattern and is incredibly popular. Traditional, I believe it's from Scott Carney. Also look for so once an AB equals CD forms, they also extend a Fibonacci retracement tool from point A to the peak of the AB equals CD formation, and they look to, I think his move stops to break even at 38.2% Fib retracement, which I'm pretty sure this would have met. So look, as for a downtrending market, I applied 2 Fib extension levels here on the same chart as before. So look, the first is drawn from A, B, and C. See how price came within a whisker of the 100% extension at 0.904 before pulling back. These 100% extensions, the AB equals CD configurations, are very popular and really do help support other technical concepts. I then drew another extension from A here. This is marked by a black arrow, to B here, to C here, and applied the 100% fib extension, the 127.2% fib extension, and the 1.618 fib extension. So look, we had a near test of the 100% extension again before price made a solid move. The 127.2% fib extension did not really give much. I believe it did give a small reaction. You would have seen that on the lower time frames. But the 1618 fib extension produced a reasonably healthy reaction. So these could have all been target points from any short above this area. And also these areas can support or reinforce another trading setup. So look, and finally, we're on to Fibonacci projections. Now, to apply fib projections to the charts, unlike fib extensions, you only need 2 swing points. Here we're using the daily time frame on the dollar-yen chart. But to apply projections, as I said, we only need 2 points to project levels from a wave. From the chart, we can see I used 2 distinct swing points marked A and B. Of course, although this is a cherry-picked example, it clearly shows the arrangement required to form a fib projection. So to draw this, we start at point A and extend the fib extension tool to point B, and then we drag the fib tool back to point A, and this will extend this will provide you your projection points as shown on the chart. So look, note the support offered by the 1.272% fib projection. You know, it bounced price twice really well, in my opinion. Also noteworthy, of course, is price came within striking distance of the 1.618 fib projection in early 2020 before setting about rallying nearly 800 pips. What's also good during the 2021 advance is I extended. We saw price react off the 1.618 fib extension. Look, guys, all I did here was from point A to point B. So start at point A, extend the fib extension tool to point B, and then drag the fib extension tool back to point A. And this will provide you your 127.2% and your 1.618% fib extension. And as you can see, we had a reasonably modest reaction off the 105.52 level. So look, guys, to ensure you walk away from this presentation with a reasonably thorough understanding, I thought I would spin things over to the live charts on TradingView to show how to draw these manually. This will be helpful for newer traders here. Do bear in mind, though, this will be a freestyle approach where we'll look at the charts together. So, guys, are there any charts you want me to look at? I currently have the Aussie dollar, the Euro dollar, and the dollar CAD on my system right now. I can add any charts you guys prefer. And also, if we have time at the end, I'll introduce a concept known as Fibonacci Clusters, which is essentially an area on the chart where fib levels converge to form what's known as trading confluence. And let me just check the questions, guys. Aussie dollar, yeah, I have that up there, guys. Okay, brilliant. Okay, so I'm going to kick off with the Aussie dollar. Let me just spin things over to the charts. Okay, guys, you should be seeing the Aussie dollar H1 chart right now. So look, how I would begin with this is I would, I'm not sure how many of you guys use the use TradingView for your charting, but you can also use this on MT4 and MT5. I think it's an expansion tool on those platforms. Okay, so look, right now we have the Aussie dollar. I'm going to kick it off with a fib extension. Okay, fib extension, and I'm going to click on the 127.2% and the 1618%, and yeah, we didn't get much of a reaction from this area here. We got a tiny bit here, but it wasn't anything to get, you know, to write home about. Let me just click that off, and let me have a look at the other ones. Give me a second, guys. I think one formed around this area just by looking at it. Yeah, look at that. So look, guys, look. This is the fib projection. So let me just delete that actually. So fib projection. We start at point A. Remember that point A. We extend to point B, a swing higher. Click and bring the fib extension tool back to point A. This extends. This gives you the projections. So as you can see in this case, the 1.272% fib extension provided absolutely zero, but the 1618% projection provided a really fantastic wall of resistance. Now I'm just going to quickly spin over the fib retracement to see if we had any confluence formed here. So look, I'll just click on the 78.6. Yeah, look at that. So here's an example of fib confluence while I have it on the chart. Sorry about this, guys. 1 second. Let me just get rid of that so it's clear. So look, we have the 1618 fib projection at 77.80, 77.90, and we also have the 78.6% fib retracement converging with the area as well. Now, if you look at the books, they really want a tight area to form to give you. This is what's called a Fibonacci cluster. So literally, all it is a cluster of Fibonacci levels joining at a specific price point. So this is what we have here, and note the reaction. So if I just go back to, if I just delete this one. So look, as I said, we have a 161.8% fib projection, and we also, I believe, there's a fib retracement kicking off around this area here. Let me see, it's probably a 50. So look, as you can see, we have the 50% retracement holding price on a number of occasions. This was joined. Let me just remove this. Second, guys. So this is the fib retracement. Again, let me just draw this in for you guys so you can see. So we start at point A, simply extend to point B, a swing high. That's all we have to do with the Fibonacci retracement ratios. And this will provide you an array of ratios. But in this case, we had the 50% hold price once, 3 times before lifting to fresh peaks. And again here on the way back down. I'm not sure if there's anything else. I think there's a few more we can find on the, here we have a clear, I believe it's a clear fib retracement. Again, look guys, from point A to point B for the fib retracement. And here we have, no, we didn't really get much of a reaction from that area, but this is another thing you should really, fib traders can also use is to form zones between the fib areas. As you can see here, I've simply drawn the fib retracement to from point A to point B, and I've formed what's known as, you know, a fib resistance zone. As we all know, price does like to whipsaw through levels, so we always need to give the trade some breathing space. This can help form a nice area of support or resistance. And also here, guys, we probably have something kicking off with the fib. So look, guys, again, I'm going to draw the fib projections, point A to point B, back to point A. And we see we have some confluence going on here with the fib projection. Now, what about if I add the fib extension? Again, remember, this takes 3 points. We extend from point A to point B to point C. 3 points. Let me just get the 127.2% on the chart. And look at that. We have a nice piece of confluence here. This is what I would call the Fibonacci cluster, this area here. So again, guys, the fib extension in it includes a third wave. So we're projecting the distance from A to B from the retracement at C. And look, let me just highlight this area here. It really formed a nice tight area of resistance. Okay. Is there anything in particular on the Aussie dollar you guys want me to check over? Also, another point, I'm not sure how much technical analysis you guys use or understand, but when these fib levels converge with, let me just be clear, I would never ever recommend just using fib levels in isolation. Traders should always aim for technical confluence with other tools. So for instance, if there's a support area here, a supply or demand area here, a round number, a big figure, the RSI in overbought or providing divergence, always look for other cues that price is weakening at resistance or strengthening at support. So look, guys, I think I've covered most of this Aussie dollar recent action, I believe. Guys, are there any questions about the Fibonacci projections or extensions or Fibonacci retracements? I'm going to ping things over to the euro dollar next anyway, and just to show you that it can work on all time frames. I believe I have an M5 chart. So on the euro dollar, we had I'm not sure how many here trade lower time frame here, guys. Can you just ping over yes, no? When I say lower time frames, I mean the M1, M5, M15, H4. Okay. Okay, and Adam, do you use multi-time frame analysis whereby you use the higher time frames to govern direction before pinpointing an entry on the lower time frames? Okay, while I wait for an answer, I'm going to just ping up a couple of I use daily. So this is from Adam. I use daily. I use the daily. So he uses a daily time frame, I would imagine, to govern direction, and 15-minute and execute on the 5-minute. Brilliant. Thank you, Adam. Can you spot we have a question here. Can you spot a confluence using fib retracement? Of course you can. When you say confluence, do you mean with other fib retracements? If so, I think I have a couple of examples coming up soon on that. But look, again, guys, just to make sure you understand, fib retracements, point A to point B. Let me just see if that hit the 618. Oh, just missed the 618 there. But look, point A to point B. This gives you an array of, I'm just going to show you how many fib extensions it gives you. 236, 786, and so this is the same on MT4 and MT5 as well, guys, when you extend the fib retracement tool. So point A to point B, this gives you all these fib levels to work with. Now, a lot of traders, they focus only on the 38.2% and the 61.8%. However, in the harmonics, if my memory serves me correct, with the A, B, C, D, the Gartley patterns and the BAT patterns, we also include the 78.6% and 88.6%. So, okay, as you can see in this example, we come within striking distance of the 61.8% before extending higher. Now, knowing we have that retracement, I'm just going to see how this landed on in terms of fib project. Look at that! Wow, this is how accurate it really can be. This is the fib extension. Remember, guys, a fib extension from point A to point B, back to point C. Fib extension. Sorry, excuse me, guys. Fib projection. Fib projection. 2 points from point A to point B, back to point A. Fib projection. So look, we projected that from these levels here, and we saw a to the pip reaction off of the 127.2% fib projection. at 1760. So we could also, I'm just trying to think if there's any confluence coming on this area. I'm just going to ping across a couple of retracements to see if we had any confluence. And we did, I believe. Let me just get rid of all that. All the other ratios, 78.6. Okay, so we had some additional ratio confluence spotted here that we can also spring it up. So this is this could be an example for you. I believe it was Neo that asked about the Fibonacci retracement confluence. Let me just ping across the 61.8. Here we go. Yes. So look, guys, this is what you could say. This is a fib cluster for me. We have a really tight area of fib studies emerging around this area. Neo, this is what I would say. So Neo's question was, can you spot a confluence with using fib retracement? This for me is confluence using just a fib retracement. Forget the 127.2% fib projection for now. But yes, this is what I would say is confluence using fib retracement. Let me just see if we had anything else line up with this area. I don't believe we did. No, we might. No, nothing really that really catches my eye. Okay, let's remove that. So we can also extend. So from this point here, we can also extend the. I wonder if we had a Fibonacci extension line up with this area as well. I don't think we did, just by looking at it. No, and the 100% will be above that, I would imagine. Yeah, just above it. So look, we also had the 100% fib extension just above that at 1765. Excuse me, guys. So let's just extend the fib extension down this from using the 3 points. Give me a second, guys. I'll just ping that across. They really are quite accurate levels, I believe. I mean, you only have to look here. So the fib extension, again, guys, 3 points from A to B to C. We had a nice reaction off the 100%, a reasonably decent reaction off the 100% fib extension. Again, guys, this is only 5 minute, the M5 time frame, and we had an absolutely beautiful reaction off the 127.2% fib extension at 1741. This was today, actually, early Europe hours, which rallied over 1714. 30 odd pips. So look, these levels do really do hold price, but again, I would always advise using confluence with these areas. What I mean by that is additional support and resistance, or like Adam said earlier, some higher time frame action. So imagine if you're coming off a higher time frame area. So a higher time frame area is around this zone here. We know that's a daily support or a daily Quasimodo support, or even a 200-day simple moving average, for example. These are dynamic supports, by the way. If that aligns with these areas here, then I would say that's a very high probability trading opportunity that we as traders can take advantage of. Okay, look, I'm just going to spin things over to the dollar CAD on the monthly to show how fibs work on the bigger picture. So look, I know from here, from previous analysis, I know we had a 50% reaction off of this zone around this area here. Now this is the monthly time frame, which means every month a new candle forms. It's very, very slow. I would never trade this personally. I would always use this just for direction, as I do in my analysis. Actually, I use the monthly and daily to gauge longer term flow, and the H4 and H1 to look at shorter term sentiment. So that we have the 50% at 26,125 that held nicely despite a number of upside attempts. And we also had, I believe, there's a 127 fib projection. Yes, this is what. Just erase these two. So look, we had a 127.2% fib projection. Again, guys, I don't mean to repeat myself, but I just really want this to be for newer traders to really understand how to apply these charts. Fib projection requires only 2 points, from A to B. All you have to do is extend from A to B and then pull that Fib extension tool back. Okay, and as you can see, we had a nice reaction off the 4186 level, the 127.2% Fib projection. Now, for any technical analysts out there, you will also note this is forming the beginnings of a double top pattern. Now, some traders believe that this is already a double top. I guess you can say it is, but this is not for me. I mean, traditional studies would say we need to break the neckline of the double top pattern. So if we get a breakdown here, a close below here, we're likely going to be moving from, likely I say, we never know in trading, hefty move, a real hefty move with a projection target for of around 94.11. So I've slightly diverged here from fibs, but so look, guys, are there any questions? I don't see any coming through. Are you all clear on the Fibonacci retracements, the extensions, or the projections? Because if you look, there's a lot of different answers on the net. I don't see any more questions. Are you all clear with the Fibonacci clusters of what I've shown so far? These are quite advanced. There's actually a book written on it. I can't remember the author, but Fibonacci clusters are very decent areas to watch. So look, guys, no questions at all. Okay, a little bit more on Fibonacci clusters. Okay, so look, guys, Fibonacci clusters, as I said, look, I'm trying to figure the right way of putting this across without overwhelming newer traders. So look, it's commonly known, as I've already said, that the best way to increase your chances of success is to look for technical confluence, right? The logic being that the more pieces of evidence we can gather to support an area, the better the odds of a favorable outcome. Fibonacci clusters, as I've shown on the charts, are a type of confluence as it involves multiple Fibonacci ratios aligning to provide high probability support and resistance. So on the chart of the, I believe, the $CAD H1, just give me a second, guys. I think there's one on the $CAD H1. I'm not sure what I did with that. I believe there's some confluence. Let me just mark this up real quick, guys. Let me just see. So you could say these areas offer confluence here. Here. So we have a reaction formed of this area here. So look, guys, the more fib levels that converge within an area, the higher the odds of price reacting to the zone. Look, I don't see any more questions coming through about this, so I assume everyone understands how to apply each of the Fibonacci tools. Okay, and that's fantastic. If so, if there's no more questions, guys, I think I'll let me just check. I'll swing things over back to the slides. Oh, sorry, guys. Here's the $CAD example. 1 second. Guys, just to make sure you can see this chart. This is the $CAD H1, and this provides us with a Fibonacci cluster using a 50% retracement ratio. Guys, this is not a fib level, as I've already said. 50% is not a fib level. 61.8%. I'm not sure if you can see that on the slide, but it's in there. So the 50% and the 61.8% converge to form a really, really tight area of resistance. And we also have the 127.2% fib extension at 31.45. As I said, guys, I think I've already shown this actually. we had a nice area of fib resistance around this zone. I'm just seeing if there's any other technical confluence that we could have drawn from here. There's nothing really to the left that I see in terms of supply. There's nothing really that I see. Okay, so look, there are some questions coming through. Will you provide a video replay? Yes, as I said at the beginning of the webinar, there is a recording of this presentation. It will be available on the FP Markets website and their FPM and the FPM YouTube channel. We'll also send out an email at the end of the webinar with instructions on how to access this. There's another question here, do we always use both extension and projection in analysis? Now, Bill, that's up to you. How you use this is down to your own individual, your system, right? So you have to test this, you have to back test this. I personally use all of them. I like to see, for instance, here on the dollar CAD chart, I like to see the 127.2%, the fib extensions, fib projections, and retracements converge at one point. But to be honest, guys, look, we only have the fib extension here and the retracement, and that's good enough, in my opinion. We don't need to have the extensions and projections together, but it's nice to have them in your trading tools. Any more questions? No problem, John. No worries. Okay, so if there's no more questions, so look, as always, guys, if there are any specific topics you feel that you want the team here to talk about, please be sure to send in your suggestions to support@fpmarkets.com or marketanalyst@fpmarkets.com. Look, guys, unfortunately, I think that's all we got time for today. I sincerely hope you took, some of the newer traders here were able to walk away from this presentation more knowledgeable, especially regarding Fibonacci. Also, do make sure to register for the FP Markets Telegram channel to get instant updates. The sign up tab can be found at the lower left part of the FP Markets website. Okay, on that note, thank you all so much for taking the time out of your day to be with us. I really hope you took something from it. As I said, have a great day, and I'll see you all again very, very soon. Thank you, guys. Goodbye.